We're starting back up on page 60 in our book, and we're going to look at the transactions for the month of December for Net Solutions. First transaction we covered in the last section, and that was $2,400 for prepaid insurance. On December the 1st, Net Solutions paid rent for December for $800. The company from which Net Solutions is written at Store Space now requires the payment of the rent on the first of each month rather than end of each month. So we're in our journal, we'd write 1 in the date column because we're still on the same page, rent expense in the description, $800 in the debit column, and right below that we'd have cash of $800 in the credit column, and below that paid rent for December. The account number for rent expense is 52, so we'd go to our rent expense ledger, put the $800 into the debit column, and put 2 in the post reference because this is still page 2 of the journal. And we'd come back to the journal and write the account number 52 for rent expense into the general journal. And then below that, we'd go to our cash ledger and post the $800 credit in there, and then come back and put a 2 in the post reference because it's page 2 of the journal, and then come back and put 11, which is the account number for cash, in our general journal. And I won't explain that how to do the ledger every time, but we would do that each time we make a journal entry. The next thing that happened was Net Solutions received an offer from a local retailer to rent the land purchase on November the 5th, and the retailer plans to use the land as a parking lot for its employees and customers. Net Solutions agreed to rent the land to the retailer for 3 months with the rent payable in advance. So if we go to our general journal, we put in there, we debit cash, we put the date, the 1st, we debit cash for $360, and that's the amount of rent for the 3 months. And then right below that, we credit an account called unearned rent for $300, and the account number for unearned rent is 23, and it says received advance payment for 3 months rent on land, and we put it in an account called an unearned rent account. The next thing that happened was Net Solutions purchased office equipment on account from Executive Supply for $1,800. So in this case, we create a new asset account called office equipment, and we give it a ledger number of 18, and we debit that account for $1,800, and we credit our accounts payable for $1,800, and below that we put purchased office equipment on account. And the post references again are added as we post those to the ledgers involved. The next thing that happens, Net Solutions paid $180 for a newspaper advertisement. So we debit miscellaneous expense on December the 6th. We debit miscellaneous expense for $180, credit our cash for $180, and then put below that paid for newspaper ad. On December the 11th, a Net Solution paid creditors for $400, and so we debit our accounts payable for $400, and we credit our cash for $400. And I believe that's the balance in that on that supply account where we bought the supplies on account. And then Net Solutions paid a receptionist and a part-time assistant for $950 for 2 weeks' wages. So on December the 13th, a new page in our journal, we got 2009 at the top, date December and 13, and then we put wages expense and $950 in the debit column, and cash $950 in the credit column, paid 2 weeks' wages as a description, and then we put the post references in as we post those to our ledger. On December the 16th, Net Solutions received $3,100 for fees earned for the first half of December. So we debit cash, $3,100, and we credit fees earned $3,100, and then we put receive fees from customers, and we put the appropriate post references in as we post those to the ledgers. Now we're going to take a look at example on page 63. And this one we're going to do a journal entry on August the 7th for fees earned on account for $115,000. So in our general journal we'd put August the 7th, debit our accounts receivable for $115,000 because we didn't get the cash. We only got, we sent out the invoices. So we debit the accounts receivable for $115,000 and credit fees earned $115,000. Remember, doing accrual accounting, we account for our revenue and expenses as it occurs, not necessarily when the cash is received. Our next transaction for Net Solutions is on December the 20th, and it paid $900 to Executive Supply as part of that $1,800 owed on the account. So we debit our accounts payable, $900, credit our cash, $900, and then pay part of amount owed to Executive Supply Company. Our next transaction takes place on December the 21st, and we receive $650 for customers in payment of their accounts. So this one, we're not really selling anything at this time, but you remember we billed out $3,100 to our clients, and now we're receiving $650 of that cash. So we debit the cash, $650, and we credit the accounts receivable, $650, and post that to our ledger. Then Net Solutions paid $1,450 for supplies. So we debit the supplies asset account, $1,450, credit to cash, $1,450, purchase supplies. On November the 27th, Net Solutions paid the receptionist and part-time assistant $1,200 for 2 weeks' wages. So in our journal we put 27 wage expense, debit it for $1,200, and credit our cash for $1,200, paid 2 weeks' wages. And then on November the 31st, Net Solutions paid the telephone bill for the month, $310. So we debit an account called Utilities Expense, $310, and credit our cash expense for $310 and put paid telephone bill. And then Net Solutions paid $225 for the electric bill for the month. So we debit utilities expense, $225, credit cash, $225 in our general journal. And then on December the 31st, Net Solutions received $2,870 for fees earned for the second half of December. So we debit our cash account, $2,870, and credit fees earned, $2,870. Okay, and then on December the 31st, Net Solutions earned $1,120 on account for the second half of December. So we debit accounts receivable for $1,120 and credit fees earned, $1,120. Again, this is where we're billing out, but we're not receiving the money yet. And then on the last day of the month, Chris drew out another $2,000 for personal use. So we put 31st in the date column, Chris Clark drawing. In the description column, $2,000 in the debit column. Right below that, we indent, write cash, put $2,000 in the credit column, and put those post references in as we post those to the ledger. And then our descriptions, Chris Clark withdrew cash for personal use. Now we're going to take a look at another exercise. Well, I tell you what, we're not going to do that at this point. We're going to stop right here, and we'll pick up in the next section and hopefully finish up the chapter. Thank you, and have a great day.